Alibaba is scheduled to report quarterly financial results on November 25th, 2025. Investors are asking me if they should buy this stock before the company announces earnings. I'll answer that question in this video, as well as look at the company's prospects over a longer term and share with you my fair value calculation for this business.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So in its most recently completed quarter, Alibaba reported $34.6 billion in revenue on US terms, and their income from operations decreased by 3% to 4.9 billion in US dollars. Now, one of the reasons why Alibaba's revenue and profits are struggling is because of increasing competition and increasing headwinds in the markets that Alibaba operates, primarily in China. The company is spending aggressively to try and regain market share and reinvigorate revenue growth. And that's leading to worsening profitability, which I'll share with you a little bit later in the video. Another positive for Alibaba stock investors is the company's AI segment has grown triple digits for several consecutive quarters. Alibaba is sometimes known as the Amazon of China because it operates similar segments to Amazon, including an e-commerce segment and a cloud services segment. The cloud services segment is where the company reports its AI services, which have increased by triple digits year over year for several consecutive quarters. Alibaba, like cloud service providers in the United States, is spending aggressively to expand its data center capacity optimized for artificial intelligence. Of course, Alibaba no longer has access to NVIDIA's chips because of export restrictions. So Alibaba is using chips from local service providers, local chip providers, and even though those chips are not cutting-edge technology, the company can utilize larger clusters and larger buildings and larger scale in order to deliver similar results as you can achieve with a smaller data center using NVIDIA's latest generation technology. So looking at the company longer term, you can see that revenue growth stagnated in 2022 and in fact decreased from 124 billion down to 122 billion. Prior to that, Alibaba's revenue was on an excellent growth trajectory, increasing from 11.7 billion to 113 billion. And since 2024, Alibaba's investments to reinvigorate growth have been working relatively well. Its revenue increased from 129 to 140 billion in the most recent trailing 12-month period. However, those investments have had consequences. Alibaba's operating cash flow to sales ratio has been declining since 2016, where it peaked at 56%, which it was an excellent operating cash flow margin, and it's fallen all the way down to 15% in the most recent trailing 12-month period. Alibaba's return on invested capital had been on the similar trend, declining all the way to 2022, but it has reinvigorated growth in this category, increasing from 4.7 to 8.2%. As I often say with the return on investor capital, you want to compare this with the company's weighted average cost of capital. And if the WACC is above the ROIC, then the company is destroying shareholder wealth. And in the case of Alibaba, even though its return on invested capital is increasing, it's still below its weighted average cost of capital, where it has been over the previous several years, closer to the previous decade, where it's failed to generally increase its return on invested capital. And this is largely due to increasing competition, which makes it more difficult for a company to generate sufficient returns on capital because the industry-wide investment in growth and investment in promotion, incentive, and supply weighs down on the industry-wide profitability. Now, Alibaba is trading at a forward price to operating cash flow of 12.9, and this compares to about a fraction of the valuation of other e-commerce companies that are trading and operating in similar categories. Furthermore, when I calculated a fair value for Alibaba stock, I found this business to be worth $141 per share, and the current market price is $160 per share. Now, I will say, I've had Alibaba stock rated as a buy, I want to say all the way back since 2022. I had it rated as a buy all the way until about a month or two ago, where I downgraded the stock from a buy to a hold because the stock price had increased by so much without the company experiencing increase in revenue and profitability and cash flow to justify the increase in the share price. Now, since I downgraded the stock, it's down 4% in the previous month, but year to date, it's still up over 89%. So it looks like I downgraded the stock at an excellent time, right before the share price started to hit headwinds and decline from its peak of $180 per share. In the near term, it faces significant headwinds as the tariffs implemented by the United States against all of its trading partners, especially against China, is lowering growth rates in economic activity, especially in China, and then also in many other regions where Alibaba operates. And so decreasing economic activity is likely to make Alibaba's prospects worse in the near term. And if these tariffs persist beyond the current administration, and the level of competition continues, it'll be difficult for Alibaba to generate anywhere near those operating cash flow to sales ratio it was generating about a decade ago, or to reinvigorate revenue growth up above double digits or even closer to double digits. So, all that being said, to answer the question, should you buy Alibaba stock before the company announces earnings? I would say no. I would say this is not one of those situations where you want to get ahead of the earnings release. Remember, share prices surrounding an earnings release are increasingly volatile, so you're getting extra risk. And at the same time, Alibaba stock is not undervalued. And so I don't see any reason why you want to take the extra risk heading into the earnings release when the valuation is not especially attractive. So I will be updating this hold rating for Alibaba stock. As you can see, I last updated this on October 15th when I downgraded the stock to a hold. And today on November 18th, I will reiterate that hold rating for Alibaba stock. Hey, thanks for watching. I truly respect every viewer who takes the time to seek qualified financial analysis. Unfortunately, there are a lot of unqualified voices online giving unsubstantiated stock advice. My goal is to provide research that's grounded in data and professional training, not just what's popular. For those new here, I hold a master's degree in financial economics. I'm a CFA charter holder, an author, an adjunct professor of finance and economics. I've spent nearly a decade researching stocks professionally, and I'm here to help you make informed investing decisions. If you found value in this analysis, make sure to subscribe and consider joining the channel as a member for early access and in-depth members-only content.